Welcome back, guys. This is Cosmo, and this is Will We Make It? Well, the stock market continues to fall. We did have a green day, but we're going to go over what we need to do in the event of a market collapse, how we can protect ourselves. We're also going to talk about how some analysts think that this is nowhere near the bottom. Some analysts predict that we need to drop another 50% before we reach the bottom. And also, what is going on with crypto? When will Ethereum 2.0 come out? I have an update for us on this week's show, so sit back, hit that like button, and let's get right to it. Welcome back, and thank you for tuning in to my channel. My name is Cosmo, and I post videos on all things creating, trading, and gaming. We're going to go take a look at what's going on in the market, and we're going to take a look, as always, we're going to go over my portfolios towards the end of the video. So you want to see where I am at with that, so make sure you stay till the end of the video. We're also going to go over some news on crypto, when Ethereum 2.0 will be coming out, and when we will hit the bottom. When can we see some sort of turnaround? So with that, let's get right into the charts. Here we are. I pulled up the S&P. As you can see, for the last week we were down 1.8%. We did have a nice kind of a pull up on Friday, which was very nice. But as you can see, if you take a look year to date, we are still down 20% for the year. So this has definitely been, and even the NASDAQ as well, it just posted its worst quarter ever in the history of the market, and it is down 29.72%. So things are looking pretty dire, but have we reached the bottom? Well, according to some analysts, not quite. Some analysts still believe that we are way oversold. There is too much money in the market due to the pandemic, all the stimulus checks that they put out, all the extra money that was put into the market through the government and through ourselves as well, have basically inflated the prices so much that they are predicting that we need to return to pre-pandemic levels before we return to a normal market level. So let's take a look at some of these articles. I'm going to pull it up here for you. Here we are, right here on the New York Times. After stock market's worst start in 50 years, some see more pain ahead. At the halfway point of the year, it has been historically horrible time for stocks. Bonds are in bad shape too. And right here goes on, shows the graph right here. 50 years. Look at this worst start in the S&P for the first 6 months of the year for the last 50 years. Wall Street sets records in the first half of the year, none of them good. So this is, according to this article, usually they're not good records for the first part of the year, hopefully, obviously because of the holiday season, the fall and the winter months, people are spending more money. So, and then during the beginning of the years, they're usually paying off what they spent for the holidays. So that's that makes sense. But here we go. The article goes on to say the sell-off has been remarkably broad, with every sector except energy down this year. Obviously, because we're paying huge amounts for oil. So naturally, oil markets are pretty good. Until we get that under control, they say we need to drill oil in our country. I think that's a strong solution. I agree we should weed ourselves off of oil and fossil fuels eventually, but you can't just cut off oil supply and expect everybody to just jump on board. It just doesn't work like that. It takes years and years to progress, especially something like what everything uses. Planes, trains, cars. Factories, everything uses gas and oil to function. So, you just by cutting our oil supply, you dramatically drop all of those sectors down. It's a cascading effect. So the article goes on to say, Bewellers including Apple, Disney, JP Morgan Chase, and Target have all fallen more than the overall market. And down towards the end of the article, it'll say economists have been raising the probability that the U.S. economy is about to go into a recession, and the shrinking economy is more in keeping with the scale of the market decline that Mr. Reed expects. He thinks that it is plausible for the stock market to fall 35 to 40% from its January peak. I mean, what peak was that? Meaning that the current decline is only about halfway finished. So, crew, look what this looks like. We're only halfway through this market downturn. So, how do we prevent ourselves from our continual losses? How do we take advantage of this current situation that we're in? And crypto also is suffering even worse than the market. Bitcoin is down over 50%. Ethereum is down over 70%. So things are pretty dire indeed. Let me see if I can pull up charts right now. Today, crypto is turning it around, but you can see the 7-day still down 7 days for the week. And if you pull out the long-term charts for a year to date, you can just see the complete decline all the way from March. I mean, this is 50, almost 60% decline from March. This is over, actually more 70% from March's peak. But for year to date overall, it's about 50% down. And Ethereum is much worse. We can look at Ethereum too. I'll pull it up real fast. As you can see, year to date, it is just a complete drop as well. And same thing with altcoins. The altcoins as well are pretty much dropping. You know, today is a little nice turnaround, but the crypto is directly correlated with the market. So at least right now, and you know, in this early phase of crypto development, it is generally tied to the market. It is considered a riskier asset. People are going to put their excess cash flow into crypto, and with inflation and markets tightening and financial wallets tightening, it is much harder for people to invest in crypto when they have to spend all that extra money on food, gas, you know, bills, utilities, rent. So the people that had crypto are either moving their crypto to compensate their losses in their market, their other investments, their stocks, their retirements, their 401k, their bonds. They're moving their crypto. They're moving out of crypto to help substantiate their losses from the market. And the people that are not into crypto refuse to get in because it's so volatile. So it's a double-edged sword here. That's why crypto is falling so dramatically. So here you can see the world's largest cryptocurrency by market capitalization is trading down 7% over the last 7 days, and Ethereum is also down 12%. Goes on to say the number of active crypto users among Bank of America's customers slumped more than 50% to fewer than 500,000 customers between November and May, according to a new report from the bank. So as I said, people are selling off their crypto. They're moving out of crypto, which is causing the price, which is not helping the price at all. We're getting lesser and lesser people, which is one of the articles that I had mentioned before. To eventually reach the bottom, you're going to have to hear and see people just say, I'm done with crypto. There's not going to be there's no value in it. I'm getting out. I'm capping my losses. That's when you're going to see capitulation. That's when you're going to see the bottom. And then after we reach the bottom, that's when you're going to see the next huge bull run. So what do we do now? Well, we dollar cost average in the assets that we like. With me, it's Ethereum, it's Sandbox, it's it's Mana, and I'm reinforcing those crypto coins now that the prices are going down. They're considerably. Sandbox is down Ethereum's down 70%. Sandbox is down 70-80%. it's just insane, these prices that they're dropping. And by dollar cost averaging in, you're going to continue to bring your average price down. So when we hit that next bull run, you're just going to be getting more coins for your money because the price is so cheap. And when the market recovers, you're going to reap those rewards in the future. You know, last week I mentioned that Tesla was laying off employees. Well, we just got an internal memo from Facebook warning employees of serious times. An internal memo listing key product bets. We're in serious times here and the headwinds are fierce. So Meta is warning of serious times and preparing for a leaner second half in 2022, according to an internal memo circulated to employees this week. The note comes from Chief Product Officer Chris Cox and outlines the company's priority and challenges to its business going forward. We all know Facebook has been taking a beating as late, just like all the tech stocks are. So don't be surprised if we see some more huge layoffs coming from this company as well. I also want to quickly touch in on Ethereum. 39% decrease is accompanied by large-scale whale purchases. So as the general retail investor bows out, these whales, these big money buyers are just loading up on Ethereum. You know why? Because they know that Ethereum is going to explode in the future. It says holders of large Ethereum positions have been actively accumulating more tokens over the past 3 weeks, according to data from Sentiment. Despite the growing capitulation in the cryptocurrency market, during which Ethereum lost nearly 40% in value, wallets with balances between 100 and 100,000 Ethereum put about 1.1% of tokens' total supply into their bags. I mean, it is just, they know that Ethereum 2.0 is getting ready to come out. That is going to cause it to explode. Ethereum is the main, it runs everything. All the altcoins, all the major altcoins run on the Ethereum blockchain. When Ethereum 2.0 comes out, this is, in my opinion, the safest bet as far as crypto goes that you can make. If you want to enter in the crypto, if you want to get into the crypto space, Ethereum is the safest position to do so because everything runs on the blockchain. Everything runs on the Ethereum blockchain. And speaking of Ethereum, we do have an update on the rollout. Let me go ahead and pull that up. And here we have Ethereum difficulty bomb delayed to mid-September. Now this is, it was supposed to hopefully come out in August, but hey, mid-September, as long as it's within this year, and if it isn't, it is what it is. We want to make sure that they're getting it right. It's just more time for us to stock up on Ethereum while the price is cheap, because I can pretty much guarantee once this Ethereum 2.0 launches and everything goes smoothly, we may never see Ethereum at this price point again. So if you're looking to get in Ethereum, now is the time to buy. So the article goes on to say Ethereum developers have delayed the network's so-called difficulty bomb by about 100 days, pacing a rough estimate in September for its long-awaited transition to proof of stake. So, like I said, they're basically trying to get it right. They don't want any type of delays or any types of failings or time delays on transactions. Basically that's the difficulty bomb is basically a gauge where if the blockchain gets overwhelmed, whether it be, the transaction speed be delayed or increase significantly. So, get it right the first time. That way there won't be any issues. And a few more days of waiting, I'm all for it. The more I can pile in to Ethereum. And of course, like we always do towards the end of the video, I go over my portfolios, which I have here brought up. Here we have the following week of June 26th. And as you can see, we were up 224 from the previous week, and I have the numbers. I didn't do any changes as far as trades for the week. I just continued to dollar cost average like I did. I put in my $80 into stash that are divided up between the different stocks that I have. And I also entered a few more positions in Ethereum to basically, I want to get to at least one full Ethereum, which would basically mean at its current price right now is about $1,100. So that means I would have invested about $1,100 into Ethereum. Well, you know, based on its current price, but that's what I'm looking to get. I have about 0.79, 0.78 right around there. So I think by next week I should have, well, next pay period, I should have at least one full Ethereum. So I'm looking forward to that. And let me go ahead and put in the new numbers. All right, here we are. I have the numbers for 4th of July. Happy 4th of July, Independence Day, everybody. And I hope you are enjoying your day off, grilling out on the grill. But here I have my numbers on my stash. Actually gone up about, let's see, about 38 bucks. And then Robinhood gone up a little bit. That's mainly my energy, and my energy plays in there that I have in Robinhood. My Gemini went down just because Sandbox and Mana have gone down a little bit. Remember, I reinvested back into Sandbox and Mana because I think the metaverse is the way to go. And my Webull has gone down. I have, like I said on previous videos, I really don't have anything on Webull except for my Robinhood. I have a couple shares of Robinhood and quite a few shares of Matterport, which took a significant hit this week, so that dropped me down there. And then my Coinbase, which is my Ethereum, where I've put in, and I'm looking to get at least one whole Ethereum. That has gone up quite a bit, a little bit there, almost about $200, a little bit over $200. So my total percentage is 2641. From a previous total of 2420, I went up $221. And my current percentage, I am 33% from my goal of reaching $8,000 for the end of the year. So going up on a positive in this market is definitely a good thing. So that's what I got this week, guys. Please make sure you like and comment, subscribe if this is something that interests you. I do videos on all things creating, trading, and gaming. It is a nice mix of trying to create your presence online and little tips and tricks on how to create some nice content. I also do game previews, which I'll be having one coming up here shortly, so pay attention, stay tuned for that. So please subscribe, help share this video out to others if they may be interested in that type of thing. And I appreciate you guys watching. As I've mentioned before in a previous video, guys, girls, you do not need a whole lot of money to get started. You do not need to watch these YouTube channels where they're putting in $10,000 or they've made $10,000 or they're millionaires. You could start out with as low as $5. If you sign up with Stash down below in the description, the link is in the description. You can sign out, start up with $5, link your bank account. They'll give you $20 in free stock to start out. So, and you know, if you're interested in crypto, you can sign up with Coinbase. The link is down there as well. You can check that out. If you sign up and trade over $100, you will get an additional $10 of Bitcoin. So that's a great way to start out. And with Coinbase, you basically earn crypto by taking simple little quizzes that are take like a minute, and there's that doesn't go forward until you pick the correct answer, so you can't lose, and they give you free crypto. And with all the quizzes that they have, you can earn up to about $10, $20, $30 in free crypto just by taking these quizzes. So if you want to get into crypto, sign up for Coinbase using my link down below. And just everybody, stay safe, and I appreciate you watching, and I'll see you next time. Peace.